Welcome to the SARE Ladies podcast. This is where Asian American Pacific Islander women carve out their own space in real estate and shake up the status quo. Join your hosts, Anita Wong and Ashley Cow, as they dive deep into bold strategies, personal growth, and everything it takes to own it. From building wealth to boosting confidence. Let's jump in.
Welcome, friends, to the season 6 of the SARE Ladies podcast, where we break down real estate, wealth building, and what it takes for API women to play at a higher level. I'm Anita, and I'm here with my co-host, Ashley Cow. Say hi, Ashley.
Hello.
So today's episode is a really special one because we're talking about the gap that stops most investors from ever scaling from residential to commercial and what it actually takes to make that jump. And because bigger deals come with bigger upsides, but also a completely different level of risk, operations, and decision-making, we're breaking down this topic with one of our favorite syndicator couples, Corey and Candice Muldrow from M Group Capital and M Group Residential, on what's real, what's misunderstood, and how to navigate it in today's market. Say hi.
Hello. Thank you for having us.
Thanks for being here, guys. It's exciting to have you guys here.
Yeah, thank you guys for joining us. And so if you don't know Corey and Candice, they're based in Dallas and specialize in acquiring and transforming underperforming multifamily communities. Corey drives the financial strategy and market analysis behind the deals, and Candice leads the operational side. So she oversees a 15-person in-house team and helps execute the business plan on the ground. So together, they've built a reputation for taking on distressed assets and turning them into thriving communities that deliver real results for their investors. All right. So before we get into, your story, I did want to just start off with a kind of a rapid fire question game. You might have seen them where it's, for a couple who's getting married, there's questions of who's more likely to do this or to do that. So we're going to do that game, but in investor fashion. So I'm going to read off a question and you guys can point to yourself or to your partner on who's more likely to do the certain things. So first question is, who's more likely to be conservative with assumptions on a deal?
I would say probably me.
I would say me.
Oh, really?
Oh, really?
Okay. Do you guys typically align, as far as your assumptions?
We're both pretty conservative when it comes to underwriting a deal or evaluating a deal if we're going to go after it. And Corey does most of the financial underwriting.
I think I understand what she's saying. So essentially what she's saying is I look at things from a financially conservative perspective and she looks at things from a operationally conservative perspective because she shuts down things that financially make sense on paper, but operationally they don't.
I want to give you a quick example if I can. Yeah. So a deal came across our desk the other day. It was in this area of Dallas that is a challenging area, very difficult demographic, rough area. And the deal was like 25%
occupied, 25% occupied.
Percent occupied.
Yeah.
In a challenging area of Dallas, like a rough demographic. And he was like, what should we say? And I'm like, heck no, not after what we know, what we've been through. Absolutely not. Let someone else try that one.
But it's like, we know how to do it. The numbers work. And it is, the approach would be conservative, but it's like, we know how to do it and we know how to do it better than we did in the past.
We know how to do it. We would rock whatever we do, but no. Thank you.
So that's the difference there.
I love it.
Good answer. Okay.
Cool. Okay. So who's more likely to close an investor on a call?
Corey has done it more. I have a sales background, so I know I could do it, but Corey has done it more. So I'll point to Corey.
I'll take it. I'll take it.
Okay. Sounds good. Who's more likely to bring work into a date night?
Oh,
We're not looking so good.
And I was like, I'm not answering that
Well,
question.
so here's the thing. It's like, it's hard to, when you're going 110 miles per hour and you stop at 5 p.m., it's hard to be at dinner at 6:30 and, not be there. So you kind of have to, get into the slow lane, get into the exit lane, off ramp, go through a couple stoplights to kind of slow down and get into the neighborhood. You can't go 80 miles on the highway and then just end up in the neighborhood. Like you kind of have to slow it down a little bit.
I'll remember this, don't worry.
Okay. Who's more likely to say, I'll watch the kids if there's a call both of you need to be on?
Me.
Oh.
Yeah.
Candice all the way, it sounds like. Okay. Who's more likely to win an argument about a deal? Candice?
I would say me. Yeah.
Oh, okay.
Yeah.
Who's more who's going to be called if there's a fire on the property?
I would say both of us.
Yeah, we have like a group text, and we typically get a text message instead of a phone call. And usually that text message is, I got it under control. This happened. This is what we're doing. Yada da da da. It's never, oh my gosh, what do I do? It's like, hey, I've got this under control. This is my plan. This is what we're doing. And, if we call and, call them back, then they're just kind of reinforcing everything that's already in the text message.
Yeah. So the answer is both of us.
Cool. Yeah. And it sounds like that's just, it sounds like you guys have a good system in place. So it's not like.
It has not always been like that. It is a growth process to get to where we are today, where our team members are coming to us with solutions instead of us solving all of the problems. So
Love that.
A good place to be.
Yeah. Okay. Last question. Who's more likely to impulse buy a property?
If there was a possibility of impulse, then it would probably be me. But you there's several checks and balances before you go and buy a property, So yeah, but yeah, if I mean, like I'm the visionary, so I just see opportunity.
Okay. Okay. Cool. All right. Cool. Well, I'm gonna just switch over. We're gonna jump into it now, and would love to just dive into your story. So tell us a bit about your story and what is your why?
So Corey and I met after we both graduated from college. I'm a third generation real estate investor, and Corey read Rich Dad, Poor Dad. And really that book gave him the knowledge around investments, owning businesses. And so we both were aligned there that we wanted to invest in real estate and we wanted to build wealth beyond an income, beyond our day-to-day jobs. So that helped us. And then we decided to join a real estate mentorship and education group to help get us started to do things the right way and to avoid as many mistakes as possible and just really to fast track the whole process. So we joined this group and Corey was just ready to jump in. He's like, okay, we joined this group. We've invested our money. We need to buy our first single family home. I'm planning our wedding in Cabo San Lucas. And I'm like, I can't do all these things at one time. Like I'm planning a wedding. You're wanting to buy this house. This is an ugly house. It stinks. We're going to have to put all this renovation dollars, oversee the renovation. It's just too much. So
mind you, we never owned any real estate before. Like
no,
we were living in a high-rise apartment and neither one of us owned any real estate before.
Yeah, against what our family was telling us. They were like, you need to invest, you need to have a house first. But we joined the program to help us learn how to buy smartly and invest in real estate. So anyway, Corey kept pushing the subject. I'm so glad that he did, because we bought our first single family, renovated it, got a renter in there right before we left for our wedding in Cabo.
Wow.
Yeah. So our why now is it's being good stewards of what we've been given. So we are very, very blessed. We live a blessed life. We've got 3 amazing boys, 4, 2, and now 8 months. And we built this life together, and we have a beautiful home. We've got all these blessings, and we feel a responsibility to continue what we've been blessed with, and to grow what we've been blessed with, and to impact and help as many people as we can. So that's our why, in making sure that we are using all the gifts that God has given us.
Love that. Was investing like a first date question for you guys?
No, I don't think.
I don't think
we were just
investing
trying
came
to
up.
get to know each other.
Yeah. I don't think investing or anything like that came up until down the line. But it definitely was. Where would you say it came up?
Well, first of all, like, we've come a long way. I mean, we were initially like getting those credit scores together.
Oh my gosh. Yeah. Like
my credit score was terrible.
I was 6 figures in debt from school.
Yeah. And so the first thing was just like Dave Ramsey, like, following his advice, getting stable with our finances, getting our credit scores up, saving. And then we elevated to, okay, now we've got these great paying jobs. So now what are we going to do? We know that real estate is the way to go. It's created more millionaires than any other, asset or a way to produce wealth. And so we were like, let's do it. We want to be good stewards again of what we've been given.
Love that. Okay. So start off with single family, and then how did your portfolio evolve from there?
So we started with single family. We bought our second house, I think, we first bought our first single family. Then we joined the multifamily level of the investment group that we're in. And we learned about multifamily, and it was like, wow. So we can buy this many doors. We can have this much, invested, 2 million, 1 million, and buy, a $4 million property. Like, wow. Like, the leverage that you have with that is wild. And then once you really start building and buying bigger properties, you can have a team on site that runs the property for you. So you're not running to the property and collecting rent and answering the maintenance calls. So it just made more sense to scale. So you're able to do more. So that's what helped us along the way. How we got started is we started investing as limited partners with folks that put deals together, syndicators and deal sponsors. So we learned from them. And then we were like, we can do this too. So we did. And we started that network and started talking to brokers and really built that team so we could go after our first deal.
Awesome. Okay. So what was that like aha moment then? So you obviously started off in residential, but it sounds like you moved quickly to explore the commercial side. So was there like an aha moment saying like that showed you like, hey, we can actually do this. If we can buy a single family home, we can do this on the commercial level?
I think the magic was being in close proximity with people who were doing it. And, whenever you see someone do something, you watch them do it. Like, we called up a few people, sat down with them, had lunch, visit their properties. They opened their books for us. And that gave us the confidence to say, you know what? We're watching all these people follow this map. Why don't we do it ourselves? And that was kind of what the impetus was to jump out there and do it.
Okay, cool. If you had to make that jump again, would you do anything differently?
I would have jumped in earlier.
Okay.
Before we bought multifamily, we definitely took our steps. We did the single family, we invested as limited partners. It was like we were dipping our toe in more and more each step of the way. I would have gone, looking back, I wish we would have gone faster and we would have jumped from our careers sooner. I remember Corey, having conversations with me. Are you ready to quit yet? Like, have you had the conversation? Like, when are you going to have the conversation with your boss that you're going to quit your job and start our management company? So it was a process to get there. I was pretty comfortable in my corporate career. Had a great boss, great advocate for me, and was doing well. So it's like jumping out into the unknown. But the important thing, as Corey mentioned earlier, is having that network of people that are doing what you want to do, to give you that confidence to go ahead and make those jumps.
Yeah, I agree. I think, it's like having a sounding board or somebody who has been there with you or who has been there before. It just makes it a lot easier and makes it feel more achievable.
Yeah.
So I think the common thing that I always hear also is like, if somebody's like in single family and they want to move to commercial, and like you said, doing it full time and leaving your previous career, that's a pretty big leap. And so, and I think from what I understand, like, if you're going into multifamily, your most of your returns come when you sell the property, right? And so how do you kind of position yourself so that you still have the income to support yourself while getting into the multifamily business, if that makes sense?
Sure. So I think we can kind of share a little bit of our story. So the way that we did it was we started off with me kind of going part-time in my position in healthcare. So I went to like a contract position in anesthesia, contract / per diem. So I didn't have a full-time position. I had a part-time position at several places. That way I could flex up or flex down, depending on what's going on at the property level. And that was what gave us the freedom and the flexibility to, start off with a small property and then start to scale up. Once we got to a certain unit count and unit size, you can start to calculate, all right, this is what my asset management, fee is. And if we did property management, what my property management fee is. And then you look at our distributions that we're paying out to our investors because we invest in our own deals. You can start doing those calculations, and pretty fast you'll see, wow, I just replaced my income, and we can grow and scale this. And it got to a point where Candice was the person to take the first jump, and I carried mine because I could flex up or flex down pretty easily.
Cool. I love that. So what would you say is something like, if I was a residential investor thinking about crossing over to the commercial side, what is like one thing that residential investor needs to understand?
The magic of NOI and cap rate. So when you're in residential, you're basically buying for cash flow and hoping appreciation happens. In multifamily, you have what's called forced appreciation, because the valuation of your real estate is based upon the income of the property. So you can only fix up a residential house so much. But with a multifamily property, you can fix it up and increase the income by increasing the top line revenue or decreasing the expenses so that your net is actually increasing. So there's a ton of ways to do that. But whereas in single family, you really kind of have a ceiling, and you really can only cut expenses so much. So you walk into, an exponential method of increasing revenue and valuation in multifamily.
Yeah, I feel like it's the transition from just owning a property to actually like operating a business, right? And so
Absolutely.
commercial real estate's
Absolutely.
a business. And so I guess follow up to that, Candice, what, obviously you're the operation side of things. And so when you first started or as you kind of grew and evolved the operation side, what was like one thing that caught you off guard operationally?
Oh, one thing? Oh,
Just one.
many things. If I had to pick one, it would be the structure that has to be in place in order to grow your team. Because, you can do your recruiting, hire your team members, create great relationships with your team. They know what to do. But as you scale and you add more employees, more doors, that system's got to be tight. We operate in B and C multifamily. So it's working class demographic. And so you have to take that into consideration when you are running these properties. And the team aspect of it, the having the systems and processes to make sure your team is successful. I underestimated, or I didn't quite know the importance of that until we started growing our business, discovering EOS, doing research on our own. There just wasn't a roadmap to create that other than us finding the books and researching and just gaining all the knowledge that we could on how to create the system that our business was built on. And then most importantly is creating that culture. So as you continue to grow your team and have grow leaders within your team, continuing to lead the culture of your company and the values of your company is equally important. So you're setting the standard of excellence in how everyone conducts themselves at your company.
I love that. So did you build your business based on the EOS system?
Yes.
Okay. So I've heard a lot of good things about it. I read, I think it was Traction.
Awesome book.
Yes.
Such a good book. And yeah, because nobody really teaches you like a framework or how to set up your business. So I always thought that was a cool thing to implement for entrepreneurs.
I'll add something too. One of the things when we first got started is we assumed, or we made the assumption that our property managers and property management team knew more than we did. And I think that went on so long that, it really slowed our growth, because once it clicked that, actually we know more than them, and they're just more boots on the ground, but we actually know a lot more than them, and we actually need to teach them. Once that trigger switched, that was when I found that we saw a lot of exponential growth. But it's overcoming that it's kind of like a fear that they know more than you do and you're like an imposter, but really you're not. You actually know more than them.
And really, as you're building, you're going to have folks that have been more experience in the apartment industry or more experience in this area or that area. And you're going to hire them to come to work for you. But the mindset shift that had to happen in our minds was, we are the owners. We are ultimately responsible for everything in this company. So we have to be the leaders of how we want things done and how we want things to be ran. Even though we might not have all this years of experience, we're hiring those people. But at the end of the day, you've got to learn your industry and be confident in how you're leading the company. So they may have all this years of experience, but you got to have that knowledge too, and be confident in it as the owner and the leader of the company. And the way that we did it is we have our own in-house property management company. So we're vertically integrated with our asset management company. We did that because we saw the benefits of having control on that part and the property management side, and that no one would care about our properties the way that we would. And so we went that route. Some operators decide to use third party, and that's fine too. For us, it has given us less headaches to actually have more control of that. And, we've grown our business in that way.
I remember seeing, some of your posts on how you guys operate, and I think Candice, you said you just came from a skip meeting and things like that. I mean, I kind of want to hear about some of your non-negotiables on your, I guess, the day-to-days, right? I mean, what kind of things do you guys implement in order to really rein in that culture and culture of whatever you guys are implementing for those properties?
Yeah, so we base everything on our values. We hire on our values. We transition. That's our word for termination. Transition based on our values. We promote. We do evaluations based upon our values. And our thought process is the technical skills can be taught, but the values, that is our non-negotiable. You got to have integrity if you're going to work for us or with us. You got to commit to excellence. You got to be getting better every day. You've got to have a make it happen mentality, no excuses. You've got to have that team first mentality. So all of those things are basically what we look for and what we measure every single day. Everyone can make a mistake. That's not what we're not looking for perfection. We're looking for people that want to be excellent every day. And that's our expectation.
Hire for the soul, train for the role.
That's a good one. Did you make that up, Corey? Did you make that up? You stole that from somewhere. Excellent.
Very good though, right?
All right. Well, I kind of want to talk about your early project, because early on you took on distressed deals in South Dallas, and you talked about earlier that is kind of your brand now. You work on properties that are headaches for other people, and you've turned them around. So can you tell us about one of your first multifamily project, and what was the hardest part about working on those?
I'll start and go into the story at one of our most difficult properties. It was after we had purchased our 100 unit property. I quit my job to start our management company. And the opportunity came across our desk to purchase a 256 unit property that was deeply distressed in a transitional area in Dallas. When we toured the property, there were armed guards outside of the property. There was prostitution, you name it. The leasing agent was sleeping on the sofa when we went for the tour. The owner was based in California, and the property had been, not much had been done to it in about 10 years. So the deferred maintenance was off the charts. But there was an opportunity in this deal to purchase it at a very low basis, meaning a very low price per door based on what we were seeing in the Dallas market. So that's what attracted us to this deal. And we just, I guess, had nerves of steel, like to take this on. And we did. And it's amazing. We were turning 30 units a month. Mm-hmm. We had like 3 different renovation crews that we were managing all at one time. It was wild, but we were able to stabilize that property. We took the occupancy down to about 60%.
We dropped it to 50.
To 50%. And then we got it stabilized above 90% and
about 120 days.
120 days. Yeah. So that was probably our wildest experience.
That's crazy. That is nerve-wracking. I kind of want to hear about how you guys dropped the occupancy, and they did it on purpose. And I want to ask about why and how you guys did that.
Sure. So the reason why you want to you want to clean house before you fill it back up is because you have totally different demographics in place. So let's say your rent was $700 at one point, then you're going to be raising them to $1,100. Those are two different classes of resident, right? You've got, someone who they're just different. They're different incomes, different lifestyle profiles. So you have to clean out before you can fill back up, because if you mesh the two together, it ain't going to work. It's going to cause a lot of friction. So you want to clean out the non-payers, the drug dealers, the prostitution, all that stuff, and make a beautiful community for the residents that are going to be paying $300-$400 more than the previous tenants.
Mm. And I guess, obviously this is Texas. It's, certainly not California, where there are tenant protections as they do, right? So how do you guys skirt around? I mean, even in Texas, there are still tenant protection that does exist. So how did you guys manage all of that? I guess it's case by case. And
well, yeah. So I mean, like the case of that property, it was during COVID. So like we closed that thing in 2021. So COVID still had, the COVID laws and all that kind of stuff. So everything that we did had to be by the book, and it had to be, strict rules. You had to evict for cause. So we had cause, like there were lease violations, drugs. I mean, you call it, you name it. So we were following everything by the book, and, the tenants that were there, they weren't used to that. They weren't used to someone who's going to enforce the lease, know the lease, and execute on the lease.
Mm-hmm. And so, I think I want to ask about these distressed deals, because I feel like the majority of deals that are available now are kind of distressed, right? People are not willing to take the risk. You see a lot more Class C deals, and people are not willing to take the risk because of high labor, cost of labor, high cost of materials, and also just a lot of these demographics, the ones that are in workforce housing that are being picked up by ICE. And so also in Texas in particular, I think we know that a deposit is only $250. And so what Paul calls it is just a hotel, because there's basically no reinforcement of the money, right? And so there's a lot of risk, especially on in these kind of workforce housing. And I have a C as well. I mean, I had actually no evictions my first year because there was no problem, because people just left on their own accord. And people want to do that because they don't want to have an eviction on their record. But it's only $250 damage, right? That's the worst that can happen, versus the thousands of dollars that they do back owe.
Oh yeah.
So yeah, I mean, I want to ask you, so what is your advice to people that can see this opportunity? So see what's available, right? If you're a first-time investor in the multifamily space, you're probably going to be picking up these kinds of deals. They're cheaper, they're more readily available. So what would you say to them who are, gearing up to look at these deals, but kind of anxious?
Yes. So there's two things I would do. So one, if you're going to buy a distressed deal, it needs to be in a area or a B area. So if you're going to buy a deal that is highly distressed, operationally, physically, the asset itself is distressed, then the area of opportunity is buying it in an area that is an area with a higher median income. So you can take that distressed property that's been mismanaged, that hasn't, it hasn't been taken care of, the property, it's deferred maintenance, and then you can bring value in it because there's already value in that area. So I would say to do that if you're looking at distressed deals. And then the second piece of it is the area median income. So like the deal that we recently purchased, the area median income was $90,000. So what we've learned along the way is that is an important component of our underwriting. So if we're going to take on a deal, it needs to be, again, in an area that is strong, that can support the rents that we're underwriting to. And that way you're minimizing your risk because you know the folks in that area are going to be able to afford staying in your property. You just have to run it properly.
So the ugliest house in the area. I think that is like the ideal. Right.
In a good area. Yes.
In a good area.
Or in an area that's transitioning, and has a strong, development. You've done your research, that there's a lot of money being poured into the area. There's developments coming. There's a path of progress on the way. So that's another great time to kind of invest in a property in a distressed property that the area is on the rise.
Okay. So obviously you walked a lot of these properties before. What are you looking for in the first 10 minutes of walking on the property?
I would say the number one thing when you're first stepping foot onto a property is you look at the grounds. I mean, your grounds tell you it will tell you 90% of what you need to know about that property in the first 5 minutes. If you are at the property at 12 noon and there are cars everywhere on a Tuesday, I would be concerned because there's probably no one there working. If you get to the property and there's trash everywhere all over the place, that's another concern because that just shows how good the maintenance is and how much pride the property manager has in taking care of the property. Just little things like that. I mean, Candice, what would you say?
Yeah, I would say that as well, looking at how the property is being taken care of. But I would also want to look at the surrounding properties. So whenever we tour a property that looks good, piques our interest, we always drive the comps. So we know, number one, whatever the broker is giving us of what we can get for the rents, is that realistic? So we drive the comps, we'll shop the comps and see what they're getting for rent. Ultimately it could be ugly, it could be trash on the ground, but if it's the only property in the area with trash and not maintained, that's probably the one I want to go after because there's value, unrealized value there.
Got it. And then, and so in today's environment, so again, higher costs, more tenant volatility, what has to be true for you guys in order for you to buy another distressed asset?
There has to be asymmetric risk. So basically the amount of risk that's on a table, there's got to be the upside that completely overcompensates for it. So if I'm looking at, let's say I'm looking at two deals. One of them is a distressed deal that has low occupancy. It's going to take a lot of CapEx. So that's deal number one. Then I'm looking at another deal that's clean, fully occupied, operational. I can cash flow from day one. If I compare both of those deals and in 5 years, my return is the exact same, why would I do all this work? I want to sit on my couch and, watch TV. I don't want to be stressed out over a deal just to say I did a deal. Like I want to go after the easiest return with asymmetric risk. So that's how I look at deals.
Yes, I completely agree with that. And Corey will not sit on the couch and watch it. He always has to be doing something amazing. So, but yes, I completely agree with Corey, especially all that we've been through in the market and our journey. Now we're at the stage where it's completely got to make sense. So we're looking for more deals that we have bought recently. So it's more of a distressed property operationally. And we can come in with all of our skills and systems and property management to refine the operations and bring more value there. And it's in an area where there's either a higher median income or it's in the path of progress. And we can be part of building and creating a better community and creating strong returns for our investors.
Okay. So last question. So if you had to choose a clean deal with thinner returns or a distressed deal with higher upside, what are you choosing today and why?
Depends on what the difference is in the return. Like what's high?
Yeah.
Because I still enjoy the challenge.
Yeah, and I would say too, I would go with, depending on the deal, I would go with the more distressed deal with the higher return because of all the team building that we've been doing and the strong systems that we have in place. We could crush it.
Watch out. These guys are hungry. Yeah, I guess I feel like you guys like the challenge. I admire that. That's awesome.
Yeah, when our family found out we were having a third baby, my brother told me, "You guys like a challenge, don't you?"
Cool. Well, I think we are kind of coming towards the end here. So I really appreciate you both joining us today and sharing your story and some tips for success for people who are thinking about getting into the commercial space. Because I think a lot of our audience always, are thinking about that. We have a lot of, single family residential investors wanting to get into the commercial space. So I think your story will resonate with them. I really liked, Candice, what you said earlier, good stewards of what was given to you guys. I think that's a really cool, just memorable tagline to just remember, don't, I think you're given a good starting point. And so the only way is up, level up and continue to level up. So I love that. And then I think, your part of your story of success is being able to be surrounded by the people who are doing the things where you want to be. And so I think that always makes it easier for people to get started is if you surround yourself with the right people. So I really appreciate that advice. And I think the last kind of takeaway that I took was that your systems matter. And just because you started systems early on doesn't mean that your system is going to change or stay the same. It has to change with your business. And so it sounds like if you looked back at your first version of your system, it's probably not the same of what you guys are doing today. So
very different.
Cool. Well, again, really appreciate your time today. And so for our listeners, if this episode resonated with you, share it with a friend, leave us a review. It will help us reach more people. And
sorry, I was going to say, if anyone wants a copy of our due diligence checklist, we use that to underwrite all of our deals. Reach out to me on IG or Facebook. Just message me, due diligence, and I can share that. And that was, due diligence is the most important part about looking at multifamily, because if you're not looking under the hood and you're just going off what the broker tells you, then you can find yourself in a lot of trouble real fast.
I'm sure that list has evolved a lot too from when you guys first started.
It's like version 12.
So yeah, I mean, how can people get a hold of you guys?
Yeah, so you can reach out to me on Instagram, just Candice Muldrow. I'm on LinkedIn. Any questions that you have, I'm happy to help you. We've got all kinds of tools that we're happy to share. So reach out.
You guys want to re-record your outro? We'll totally do that. I
That's okay.
And I completely interrupted you, but I was like, what? I forgot to let people know. So
I love it.
Yeah, you want to land the plane again? Totally.
That's okay. I mean, yeah, that's very nice of you guys to offer that, and I think that's due diligence is probably the most important thing that people can do to make sure that they're buying the right asset. So. Cool. Well, again, thank you guys for joining us, and we'll see you next time on the SARE Ladies podcast.
Hi, my friends.
Thanks for tuning in to this episode of the SARE Ladies podcast. If you enjoyed the conversation, make sure to follow, share, and leave us a review. It helps more women in real estate find this community. And don't forget to connect with us at sareladies.com for more resources, stories, and support on your investing journey. Until next time, keep building, keep learning, and keep breaking barriers.